Hello, sir.
How you doing today, Brad?
I'm good. Oh, look, I'm wearing my the guys at Beanstalk sent me a shirt.
All my homies, SOW.
So,
So,
yeah,
so
in
in
the
wealth.
in the farm in the Beanstalk farms.
Hmm.
So, yeah,
How those guys been holding up?
they're doing well. They're cranking away. They've got new projects being built around the protocol. They're doing the recovery thing, you know. There's a I
Good.
I just great segue. Thank you. I don't even think you meant to.
No, it's called a softball. All right.
It was a softball, but what's interesting is that I just finished a few minutes ago interviewing. Oh, where is it? Okay, just finished a few minutes ago interviewing the team from Hats Finance. Hats Finance is I don't know if you're familiar with or remember. Excuse me, if you remember my interview with Immunify. So essentially, they are a bug bounty program that's decentralized. Typically bug bounty programs, the project says, "Hey, we've got money. If you find a bug, let us know." Blah blah blah. And there's been problems in the past with protocols not paying up, et cetera, and just all kinds of issues around it. So this was created by a team working, some guys who do some core dev on the Ethereum side, to decentralize that process and make it so that protocols in their next version will be able to permissionlessly set up bug bounty programs. White hats, gray hats, black hats can come in, submit it in an encrypted fashion, what they find. And then the money is held kind of in escrow. And then once the bug is acknowledged, the funds are released. But, you know, it's all happening on chain. So they have proof that they submitted it, et cetera, et cetera. So really cool system. The other really cool thing about this system is that members of the Hats community or members of the protocols community. So let's say, you know, Joe's DeFi project sets up a bug bounty program at Hats Finance. As a loyal member of your community, I can actually put more of my money into the bug bounty. So maybe the protocol puts in $500,000. I could put in $1,000, and other members of the community could put in money. And then we actually get Hats tokens kind of as a liquidity reward and around the tokens that are held for the bug bounties. So really cool system, got some great incentives. Seems to work well. They have about 24 protocols in the platform now with bounties. So it's a really cool interview. It'll be out Tuesday morning. So everybody keep an eye out. So this is
I like that concept.
Yeah,
that's cool.
Good. It's very good. Seemed like a really good team. I interviewed 2 members of the team today, and like I said, it looks like a really solid project, and I like the way it functions. It's pretty straightforward and simple. So anyway, they have a new version of it coming out probably, you know, sometime in first quarter next year, but they're not revealing dates yet. But anyway, it's doing well, and it looks like a cool platform. And they have a proposal up to the Beanstalk guys.
Here it is. Now we see.
Work on recovery of the exploit funds. So they're going to take some of the experts on their team to actually try to see if they can do something to recover the funds for a bounty. And they've done something similar on a couple of other projects. So we'll see how that goes. But anyway, that's how I got connected with them. Some folks in the Beanstalk community said, "Hey, you guys should interview Hats Finance." So I did. So
cool. Well done.
Yeah, that was good. You sent over this. I didn't even realize that Anchor had been hacked. Thankfully, I'm not on BNB on Anchor, but I guess there was an exploit of Anchor. And if you were on the BNB side staking with them and their liquid staking program, about $5 million came out. They are going to replace those funds that were lost. And so glad to see they're cleaning up the mess rapidly. I guess this happened in the last 24 hours. So anyway, thanks for the heads up on that. Got me a little nervous. Thought maybe I'd lost some money there.
Well, what I like about the story is it kind of ties into what you just said, like with Hats. is that they obviously have a response team ready, a critical response team.
Right.
So, when stuff happens like this, they're on it instantly. Whereas we know others aren't as speedy, let's put it that way. And so it tells me if Anchor's doing that, I've been following them for, I think I've had some of them since like 18 or something like that. Then others are too. Yeah. So it's another kind of cool thing to look. I don't know how they disclose that. If there's a standard at play, like something in smart contracts or in audits or whatever, or in DeFi protocols, it just says that you have, you are running a counter team. So you're ready to address any issues, instantaneously. I mean, to me, if I was looking at projects to get involved in, that would be something I'd be interested in knowing.
Yeah. Knowing that they're doing it, that they're engaged with it. The other, the other thing was cool was how they're marketing this. So not only are they reaching out to protocols directly, but they're also going to venture capital funds. And they're saying, look, your tokens are locked up. You can't do anything until you're unlocked. How do you know that your investment isn't going to get exploited? Well, why don't you supply the funds for protocol, Joe's DeFi protocol, to put up the bounty, because you've got $25 million worth of tokens, but if it gets exploited, you're going to have $25 worth of tokens. So also I liked really that strategy of working through venture capital firms to get some of the bounties set up. And they could also work through venture capital firms to say, hey, if you're out funding new protocols, why don't you make part of the standards that you have for funding a protocol that they have a bug bounty program, right? And so, anyway, good stuff. Really impressed with the team. I like what they're doing and what they're going about. Hold on, I have to sneeze.
Well, it's just another peg of the diversification of risk pool, so to speak. You don't have like one thing and say, oh, it's all on a ledger, so that's my defense. It's like you got to have like 6 or 7 things, because the 2 are going to fail.
Yep.
And so you want to make sure you got backup. Just diversify your sort of risk, your perimeter, to keep out the risk as best you can. And this is another great tool for it. What I was thinking of real quick, Brad, is that it's too bad that the protocols, like, I like the idea of the VCs making it, or investors making it, a mandatory part of a term sheet or a deal sheet or closing docs. That's really cool. I also thought that it'd be interesting if, you could put a transaction fee on top of all the transactions, some diminutive amount that feeds right into these types of programs. I mean, I don't think.
Oh, that's a great idea.
All right. So you think about Phantom.
Look at you, Joe. That's
Polygon. Awesome. You got a little bit in there, a little bit of insurance, let's say. Maybe it's 3% or it's 1.5% per transaction, something like whatever the right number is. Yeah, maybe it's 0.25%.
Have that dump straight into the bug bounty. That's brilliant.
Yeah.
Man. Wow. Nice. So, I love that. By the way,
somebody go make $1 billion and then hit our tip jar. All right.
Our own Eamon and Sync, who are community members and very active in the Beanstalk community, are the guys that connected me up with Hats Finance. So thank you, Eamon. Thank you, Sync. Appreciate you guys. And love our conversations anyway. So thank you. Let's see what else. Oh, this before we get to Sean, we're coming 2 minutes. Before we get to this, have you seen what's going on with this OpenAI text-based artificial intelligence shit?
No,
dude,
I don't think so.
Oh, dude, you got to go to openai.com and play with this shit. It is astounding. So this morning I showed my daughter. She's reading, they're reading Odyssey right now. And I said, and I told the system, I said, generate a 2-page paper summarizing the Odyssey. And in seconds, it had a beautifully written 2-page summary. So I've got a prompt loaded up. Write a series of 20 tweets on how the Ethereum virtual machine works. And we'll see what it comes out with. Because this fascinates the hell out of me, this thing. So I click submit.
Wait, so this is DALL-E is a thing that you're using? Wait.
That's the same guys, but this is Chat GPT. But if you're watching the screen,
GPT-3, got it. Okay.
Yeah. If you're
I'm on the site. Yeah.
If you're watching the screen, it's like just cranked out in however many seconds that was. 20 tweets, and almost all of them, sure, nicely written about how the Ethereum virtual machine works, what it is, how it functions. Just this is
okay. My big question here, buddy. Big question. Can you turn that into like a 20-thread tweet from there with pushing a button?
Oh, no. They don't have that integration, but they have an API, so you could.
Oh,
you could.
Okay.
You could with the API. Anyway,
cutting and pasting
fascinates me, but teachers can no longer foil this because it's not kids stealing. It's not kids stealing existing work. It's all original. Every time you submit a prompt to it, it doesn't duplicate it. And it's all very well written, like very well written. So college and high school just has some new issues.
Well, they don't know how to write anymore anyhow, so it doesn't matter. They just know how to write tweets and snaps and all that. So there's nothing, you can't fault it for this. They're not even reading the books either. So
yeah, exactly.
I mean, it is funny though, because I remember when I was in college taking a PE class of all things. It was mandatory at UNC, and I remember I was playing like club tennis there, and I had to write a paper on tennis players. So this is pre-internet days, if I'm not mistaken. Yeah, and and I ended up kind of just printing off bios of some like Wikipedia equivalent back in the mid 80s, and just turned them in the way they came out. And, but I wrote on it, compiled by, because the professor wasn't even sure what the word meant. So you're basically just saying you copied it and printed it out. Now, like you said, he could have found those, but now you look at this, there's no way anybody can find it.
Yeah.
It doesn't exist.
Absolutely.
So that's pretty cool.
Thought AI art puts image NFTs out of business. Why buy a GIF NFT when you can just ask an AI to produce them till you find one you like? Look, I'm using the generators, the AI generators for art all the time, and I love it. It's beautiful. There's just still something for me personally, from a mental perspective, the idea of an artist creating it from their mind, I would rather have. Although there's stuff that's creating that's really cool, and I like them and I use them. There's something about knowing a human did it. Now, the human could use the AI and say they created it, and I won't know any different, and maybe I won't be as inspired by it, but whatever, who knows? Let's bring up the man.
Look, there's a certain but let me finish that point before we get Sean here. Love Sean. But look, art is the process. Art is not the product. Yeah. And so to me, AI generated stuff, if it might look good, but it's not art. Right. Art is when some divine inspiration comes to you and you create something that doesn't exist. That to me is art. So I'm kind of not happy with the AI generated stuff, but for entertainment purposes, yeah, sure, why not? Yeah. But anyhow, I just wanted to jump in on that.
Or to pass, or to graduate from high school or college, either one. Let's bring in the Bitcoin Maxi, the bear, the man. Sean, welcome to the show, dude. Are we going to get to see you today, or are we just doing audio?
No, he must have spilled a Guinness on himself or something.
Yeah, maybe he's up cleaning up the Guinness. Hello, Sean. All right. Well, I got some pages loaded up for him, so he sent them over to me this morning, but I don't know.
Well, it's only 5:15 there. He can't be like out of action yet, right?
Well, he might be. Who knows? Maybe he doesn't realize we called him up, or maybe he doesn't even realize he's connected.
Yeah, hello. Can you hear me, guys?
Now we got you.
Sorry about that. I've got a bit of a kind of rearrangement of cameras and microphones and stuff like that. So,
all right. Are we just getting you audio today? No video.
Just audio today. Everybody should be happy about that.
No, man. All all your screaming fans want to see your face.
There's quite a few people screaming at me at the moment, but they're not fans.
Hey, man, thanks for coming on. We always love having you. Appreciate you being here. Do you want to talk markets a little bit first, or do you want to dive right into those links you sent me?
Yeah, maybe we'll do the market at the end, because nothing has really changed.
All right. Which link you want to hit first?
Well, I was kind of going to say, look, us maxis, as you may know, have a slightly different view of the news and the market and what we think is important. So I think I sent you on 4 stories, of which the last one I think is truly quite exceptional, and hasn't got any coverage. The first one, just, with all this stuff, is the BitMEX one on the proof of liabilities.
All right, let me load that one up for you. Go ahead.
So again, not a fan of anything centralized, as my Maxism will be well known. However, I don't believe that there's actually any real DEXs, and I also don't believe that any DEXs can offer the same trading experience as a centralized exchange, just in terms of liquidity and speed of operation and so on.
Right.
So in my little world of trading, I'm kind of pretty much stuck on CXs for the moment. Hopefully that won't be true always, but is now. And there's a lot of talk going around about proof of reserves. So, we see, all the exchanges going proofs of reserves, and they're doing it with on-chain data, and that's perfectly acceptable. Yeah, you can go,
right.
Look, you can show the reserve assets of a centralized exchange using on-chain data, and that's fine. The problem, of course, is that's really 50% of the story. Okay. The other side of the story is, well, what are the liabilities?
Right.
So when we talk about liabilities here, we're talking about user accounts. So if you think of an exchange and go, look, there's 100 users and everybody has 10 Bitcoins, then the liabilities of the exchange are 10 times 100, i.e. 1,000 Bitcoins. So we can look at the reserve and go, there's 1,000 Bitcoins, but we also need to look at the liabilities and go, the exchange, those 1,000 Bitcoins in reserve are actually a liability to the users.
Right.
That makes sense.
Yeah.
So your liabilities and reserves should effectively be, one minus the other. And MEX, and again, I always talk about MEX, and I'm not a proponent. I'm not suggesting anybody joins MEX, but they have very much been a leader in this. So during the week,
and that just happens to be where you live, like.
It's where I've traded for years. I do trade on other exchanges. I as I said laughingly, I think the last time I decided to de-risk onto FTX, and that was a seven-figure mistake on my side. But there
just
you go.
That statement, I decided, that sounds like the title of an article. I decided to de-risk on FTX.
Well, again, if you're a trader, you will always look at the one exchange risk. What happens with and again, as a maxi, I would never keep more than 30% of my stack actively on an exchange. So lots of things. But anyway, I make my living, I earn my beer by actively trading. I'm a very active trader. I said thousands of trades a day. So I have to find a venue, and I have to have a way to assess a venue. So proof of reserves is fine, but it's meaningless without proof of liabilities. So BitMEX have come out with this thing, which I think is really worth people looking at. And what it does is it allows you to look at the liabilities and ensure that the liabilities, i.e. the coins that the assets that you as a customer have on, are recognized as liabilities. And they've come up with this really cute kind of Maxwell-Merkle tree method. And what that means that they can publish using chain data what customer the on-exchange customer liabilities, and again, liabilities being Sean has a Bitcoin on MEX. To MEX, that's a liability to me.
Right.
So
makes sense.
once reserves are greater than or equal to liabilities, then we cannot have an FTX type situation. So this is a really cool thing, hopefully setting the standard. You can actually, if you log into your account, you can create a hash, and you can go off and actually check to make sure that your liability, i.e. your exchange balance, is actually registered there. So,
they've taken it to that granular a level where I, as a user, can check what I have on BitMEX, not just the overall big picture.
Yes, so you get the overall big picture.
Awesome.
There's also privacy concerns, so they've done some really cute stuff about how they present the overall data without doxing your privacy.
Nice.
Nice. And so this is, and again, I know everybody's saying DeFi fixes this, and again, ultimately, I would love to see a DeFi exchange with the capabilities of a CX. In my opinion, it's not yet there yet. So we have to deal with the devil we know.
Yep.
And in my view, this is an excellent way to understand the net position of a CEX. Doesn't rule out every possible game they can play, but it certainly rules out an FTX type of situation. So really worth the read for anybody who's a propeller head like me, technical, how they go about it, how reserves and liabilities, and how you can verify it for your individual accounts.
That's awesome. And it looks like essentially they're splitting the user balances up to protect privacy, so you can't detect which ones go to which all the time. That's really cool.
Exactly, yeah. So,
that's
you know,
awesome.
out of the FTX debacle, you know, some of the exchanges, particularly Kraken and MEX, had been doing proof of reserves, you know, for a long time before that. But this proof of liability shit is fantastic. And I think we as users should be demanding this from any CEXs that we use.
Totally agree.
This should be becoming a standard practice.
Yeah.
And it's well thought out, it's well researched. I personally can't see any issues in the way it's operated. If there are, people should contact MEX. They're actually very good. They're very open and go, hang on a minute, but not going to roll out all games CEXs can play, but certainly holds them to a far higher standard than anything else in the centralized world.
This is fantastic. Yeah, and I definitely agree. I think it should become a standard for every centralized exchange, and I'm sure they would let, you know, I mean, they're happy for everyone to use this model. And then it gives the opportunity, if it's open and available, for people to develop tools to kind of alert on and track on, you know, exchanges that might be in trouble. This is fantastic, man. I'm glad you shared this. That's great.
One thing I'd be curious to see, Sean, is, you know, because I guess if you see proof of liability, essentially you're looking at a balance sheet now of exchange holdings. The rating of where the liabilities are, like where are those tokens, you know, staked or farmed, and with what entities, and are those entities doing the same thing? You know, proof of reserves, proof of liabilities. That would be kind of interesting to see too as a next step.
Yeah, I mean, that's more in the proof of reserve. So this tells you, look, you've got 10,000 customers and their assets, which is a liability to the exchange, equal X.
Nice.
Yeah. So,
yeah,
you know, and again, if you think of that in terms of if we had that for FTX, we could have gone, hang on, your reserves are X, which is blockchain, and your liabilities are Y. We got a problem here. Yeah.
Yeah, absolutely. No, this is great. I look, I mean, ever since you started talking to us about what BitMEX has done with proof of reserves, it's obvious that they're leading the way on this. I hope others will adopt it
themselves. And Kraken, again, to be fair to Kraken, I think they were actually even ahead of MEX in terms of proof of reserves. But I think as users, we should be demanding this level. And again, if there's holes in this, people should literally contact MEX and go, hang on a minute. And I'm pretty sure that they're going to say, oh yeah, that's a fair point. But I certainly haven't seen any holes in it in terms of the scope of what it covers. Yeah.
Yeah.
That doesn't mean that they can't leverage the whole value of the exchange up the hilt.
Of course.
You know, but this is certainly a huge step forward. And again, the ability to provide users privacy while checking that your liability or the exchange's liability to you is actually correct.
Yep, absolutely. No, that's excellent. I love that they're doing that. No, thanks for sharing that. That's great.
Yeah. The next one was from Fred, the material scientist, which is
who is that guy?
I don't know. He's some guy. He does a lot of, you know, kind of shit posting on Twitter.
Yeah, he does.
He's out of prison. He's out of prison now.
I just thought he was just a shit poster. Do you know him well?
You know, some of his shit posts are the best shit posts in the industry. So
he's an intern somewhere for some premier shit poster, right?
Yeah. Just for those listening that don't know, Fred is my business partner in Material Indicators, the trading tools company, and he's a brilliant guy. And he writes, yes, he does a shit ton of shit posting, but also does a lot of amazing analysis. I'd encourage everyone to join our Telegram community at materialindicators.com to hear more from him. So anyway.
And I think one of the best data analysts in the industry by a long way. If you're not following him, follow him. You probably, like me, he's quite bearish. So, you know, a lot of the time people don't want to hear bad news.
Yep.
But very analytical, great view. But he raised, again, talking about centralized exchanges. I'm not a fan of Coinbase, never had an account, never will, for a variety of reasons. But they're playing this game, which to me is a massive red flag, which is they've automatically converted user accounts into a different form of account, advanced trade account. Okay?
Right.
And when they do that, they're automatically turning on staking.
Wait, they're automatically taking your deposits into staking?
Exactly, yes.
What?
Now, yep.
This
is
insane.
Yes. So it's not an opt-in, it's an opt-out.
Wow, that is really bad behavior.
This is horrendous behavior from a credible exchange. Yeah.
Oh wait. Yeah, can opt in.
Can opt out.
Yeah.
Yes.
For steps on how to opt out of rewards. Unbelievable.
Yeah.
Like they acknowledged it.
Yeah. It's in the terms and conditions there. So there's a couple of things I would say about this. And again, you know my view of yield. Yeah.
Yeah, of course.
And again, I'm going to quote Fred on this, that if you don't know where the yield is coming from, you are the fucking yield. Okay. So this needs to be something that Coinbase, and again, I think exchanges like Coinbase really need to be dragged out in the coals in this, of going, this is not acceptable behavior, because when I put assets on an exchange, I need to, my view of the world is I need to explicitly approve their use. Rather than you change the terms and conditions in some footnote and all of a sudden my assets are being used to whatever ends.
No, that's absolute bullshit. I mean, that is just, especially when you consider recent history with yield and staking and everything else. I mean, that's just astounding to me.
I mean, in terms of an exercise in the worst timing possible to pull this stunt, this pretty much wins the award.
And it looks like they're just going with it. Like, yep, that's what we're doing. Wow. Unbelievable. Eamon asks, how do we opt out? I think it'll say in here how to do it.
I mean, you can opt out. So it's not, my problem is that it's an auto opt-in.
Right. No, it should be opt in first, right? It shouldn't be that you have to opt in. It should be, hey, we've altered your account to an advanced trading account that we're doing for everyone. Would you like to earn in staking? And here's how it works. And here are the risks. No, but they just, wow. And what Fred pointed out is absolutely valid, right? They're not sharing with you everything they're making from the staking rewards, right? You're not getting everything. Coinbase is keeping some of that. And so that, to not only are they putting your own collateral, your own tokens at risk, they're taking money from you without your permission. And you could easily take that off exchange and stake this yourself and keep it all for yourself. So that's crazy.
And again, for yield hunters out there, if you don't understand the mechanism of the yield and the associated risk, you are the yield.
Do they clarify whether this is validator staking or DeFi? Because it says if they call it DeFi something, but I'm wondering if they call it, if they're actually staking it as validator nodes, which is a bit safer, not safe, nothing is safe, or if they're actually doing like yield farming and liquidity provisioning.
I don't know the details. I mean,
okay.
I think it's something that if people are using Coinbase, they should be very aware of.
Yeah.
And it's just, again, you know, we're seeing some exchanges do some really positive things with respect to proof of reserve, proof of liabilities, and so on. And we're seeing some exchanges do what, in my opinion, is literally grossly irresponsible.
Totally. I'm going to look at this more. Maybe I can get somebody from Coinbase to answer questions as well, because my assumption is here, based on the tokens, that this is validator staking, but it doesn't matter what it is. They need to say it needs to be that you have to opt in, not opt out. So Eamon says, I literally just added fiat and it transferred me off Coinbase Pro, and my Pro account was closed because I went over that amount. Was super confused what was happening. That's wild. I think this is part of them merging the regular Coinbase with the Pro account. They're closing down the having two sites. They're going to only have the one site. But yeah, I'm not sure, Eamon, if that's related to this or not, but that's crazy. Wow. Yeah. Wow. I guess I was at the conference the day Fred tweeted that.
Yeah.
I'm gonna have to have him
again, something that, you know, as a trader and with a person with, shall we say, a firm view of the market, what's right or wrong, you know, exchange is doing good and exchange is doing what, in my opinion, is just irresponsible.
Yeah. Great comparison between BitMEX and Coinbase.
Yeah. And probably they need to be, you know, they like anything, you know, I think as users, we have a certain amount of leverage here with respect to standards that we expect CEXs to apply to. And you know, when they do bullshit, they should be called on it.
Absolutely.
Yeah.
Call the bullshit out. Good job, Fred. Yeah. I didn't see this because I was at a conference. I will definitely retweet this.
Quick question, guys. I can't remember, but doesn't Coinbase have some kind of like SIPC, you know, the brokerage insurance on the accounts? It's not, you know, federal government insurance, but don't they have some kind of like financial industry insurance on their accounts?
Well, the cash is in bank accounts, and that's FDIC insured. They used to have, when I first had an account there years ago, they did have some kind of insurance on the cold storage wallets. I don't know if they have it on all that's on the exchange or not. They should, for what they charge people with fees, because
well, see, that's what I'm getting at, is that if they are in an insured domain, then when these, I guess, deposits automatically get opted into this, is it still under that insured domain, or does it take it out of the insured domain?
Yeah, it might. It probably does.
Because this is like, you know, obviously this is an American audience going into Coinbase who doesn't know how to use any other wallets at all.
Yeah.
And, you know, so it's the easy default thing. I mean, they're not even going to know the difference, John, between the staking and everything. And maybe Coinbase could get away with it if it's all under insurance. I just don't know, but it does seem troubling.
Yeah,
absolutely.
Well, and ultimately they're creating taxing issues for you as well, right? Because now you, as someone who's just got stuff on an exchange, you now have to deal with tax issues related to earning on staking. So that's another point. That's a great one. Thanks for giving me heads up on that, Fred. Sean, I'm going to have Fred start tagging me on these when I'm away. That's great.
Yeah, again, just behavior that should be flagged and basically going, guys, you know, and I don't know who's in their marketing department that decided this was a really good idea to do this right now.
No, that's probably the CFO that decided it was a really good idea to do right now because they need the cash.
Well, yeah, that again, your brain can follow, you know, the certain paths here. But again, I've never used Coinbase. Have no intention of ever using them. Not that I'm anti Coinbase, other than the fees. The spread is ridiculous. It's a bad, it's a bad place to as a trader, in my opinion. Better venues.
Yeah.
You got more access too. You got more access to better venues.
That's true. That's true, Joe. I don't live in the land of the free.
And be grateful.
Well, maybe one day you'll be so lucky.
You guys threw me back out. You threw me out in the late 90s.
I'm
joking.
That's all right.
I'm coming. I'm going to come live with you, Sean. So it's all good. I need a sponsor.
Way too much into that comment, Brad.
Yeah, exactly.
Well, I'm going to bring me, the kids, and the wife, Sean, if that helps.
Lovely. I have a couple of properties. You're more than welcome to one of them.
Oh yeah, we've got a property tour in Ireland we can do. That's awesome.
Like I'd say what the stories before kind of the depression of the markets, and to me, they represent the absolute best and absolute worst of what's happening out there. Yeah. So first of all, I'm going to pick on a specific project to which some of my closest friends are heavily involved. And which I'm fine, and I have a few quid in it myself. I don't care about that. But as you know, I view an awful lot of, and so I'm kind of slightly upset having to do this, but I'm such a toxic maxi asshole that I can't stop myself.
Go for it.
Is this
Yeah, this is the Boogle thing. Yeah,
got it.
So as you know, like we discussed this, I have a slight fascination around everything in the space. Yeah, and
sure.
I'm pretty quick, probably too quick to kind of write things off. A whole NFT side of things, I still find fascinating. I think there genuinely is something there. I don't know what it is. The Boogle's probably the number one NFT project. I think it certainly is a number one NFT project and has been for a long time out on the Sol network. And it doesn't make them culpable.
I call that the Control Alt Delete network,
or anal OS backwards, as somebody pointed out. But again, look, as I'll give you my views on Sol and Eth. Yeah, I don't care about the difference between donkey shit and horse shit, man. Yeah?
Oh, nice one. Nice.
Bravo.
I'm not picking through them to see the difference.
That quote's going in the podcast headline.
And as I said, I have a lot of friends and there's a lot of really good people involved in this project. But I view all of these things as experiments. Yeah.
Yeah, sure.
These are interesting things that the altcoin market should go out and see, is there anything of real value here? And they're worthy experiments. And I could say that about an awful lot of the space. And so on. And that's kind of my maxi view of it, is like, yeah, go out and play. However, the experiment that's happened here in the middle of this bear market is, to me, something that needs, despite some of my best friends being heavily involved in this, is something that I kind of have to pull up. So in the maxi world, it's, and I think it should be a role in crypto, is effectively everything's a bearer asset. Yeah. So when I buy a digital token or an NFT or whatever, okay, I get the rights associated with the asset I bought.
Sure.
Yeah, seems reasonable. There aren't two classes of Ethereum, there aren't two classes of Bitcoin,
right,
and so on. And what the Boogles came out and did about a month ago, less than a month ago, is decide to throw that aside. That you have a right to buy a Boogle, which can range from, I think, current market price, say 30, 40K, during the boom, 200 to 300K. However, if you didn't pass their membership committee, you didn't get full rights of the NFT.
What?
Yep.
What?
Yeah. Now, again, I've huge friends, and by the way, I've actually kind of a huge respect for the project.
I don't now.
No. And it does pain me to say this. I'm not anti-Boogle.
Holy shit.
And yet, I have as a fundamental principle to go, look, this is a social credit score system. Yeah.
Yeah, of course.
That this is such a wrong direction for any project in the crypto world to take, and represents, and the reason I bring it up this week versus when it happened, which was around the last time I was on, is they've actually enacted this yesterday. So somebody spent 2,700 Sol on an NFT, and they were the communist membership committee of the, sorry, now I'm getting rolling, of the Boogles decided their social credit score wasn't high enough to get on the train into full membership benefits.
Wow.
But they still took all the money.
Well, it was an OTC sale, so it was.
Yeah. Oh yeah.
Yeah. There's only 100 Boogles, and there'll only ever be 100 Gen 1. And I do like the project. I think there's some really cool people involved, some very close friends who, quite a few of them who are no longer talking to me. But there you go. That's what happens with my friends. They actually finally realize I'm a toxic arsehole.
Speaker of truth.
Yeah. So I just wanted to say, to me, this represents the very worst of crypto. In the same way, we've good exchange, bad crypto. And my final story before the depressing of the markets. And what I would say to these guys, I'm not doing this to shit in the project. In my toxic maximalism and a supporter of the project, and I'm somebody who, actually has one of these things, because I'm very curious about it. Guys,
well, you're not getting in now.
I was never
already in.
Dude,
Oh, you were never in. Okay.
I was never the fuck. I can't use Discord. It makes me want to vomit every time I look at it. Okay.
It's like you would never join a club that would have you as a member, right?
Well, that's a basic premise, but also Discord. Like, whenever I open my Discord account once every 5 years, I just feel like throwing up.
Yeah.
Guys, hop on. This is crypto. Stop justifying the unjustifiable.
No, absolutely not.
And I'm quite sure that, look, I'm picking on this one project only because I know it, only because I have friends in it, only because I have some exposure to it, so I'm aware of it. But this kind of thing is not what the business we're in my opinion. And I think these guys should think long and hard about this type of move that is so far from the core principles of what I believe this wonderful space we're in, with all its bullshit, all its Ponzi's, all its scams, is still fantastic and still can make a huge impact. And this is just wrong.
Well, this is really interesting too, because I've had this conversation with a couple of founders in the donkey shit space, and they have to deal with this, with the problem of having a large community and having people who are shilling shit all the time, scamming stuff, but they hold a token, or they're just bad news, right? They're negative and nasty and racist, or whatever it is, right? They're bringing the community down. And I asked them, what's the solution? Do you ban them? And they said, no, we never ban anyone, for a number of reasons. There may be a security alert, there may be an exploit, there may be something that they need to know. All they do is mute them temporarily and then tell them, hey, we love to have you in the community. We love that you are participating from an investing perspective in what we're doing, but we're not going to have you destroying the mood of the entire community by being an asshole, right? And so I thought that was a really smart approach. It's like, look, you need to shut up for a few days, and when you're ready to behave, you can come back to the dinner table. And this whole idea of a membership committee screening people beforehand is just wow.
It's exclusionary.
It's a complex problem, okay? And I'm not saying that, but it's a fundamental principle. If you buy a digital asset, you don't have first and second class citizens. That's exactly not the business we're in. Yeah,
totally agree, buddy.
Again, I have a lot of love for the project. I have a lot of people in the project who are close friends who are currently hating me. I'm not doing this for any other reason than to go, when I see bullshit, I'm a loudmouth, toxic fucking maxi.
Love it.
Say it.
Love it.
Okay.
Love it. I was talking about you last night, by the way.
Oh my God.
Yeah.
In that dream you told me about?
I happened to be sitting with some other Bitcoin maxis. So it was a good conversation. So anyway.
Jeez, man, you're sitting in uncomfortable company these days,
dude. It's like that conference I was at this week was heavily leaning Bitcoin way, and so
the institutional one, right?
Yeah. So a lot of the contacts I made there are Bitcoiners / Bitcoin maxis. So I've had some really good chats. Anyway, wow, this is pitiful. I'm really glad you're calling it out, Sean.
Yeah.
And that's what we have to do, right? We have to say when a project, even if we love it, is behaving badly, we need to say it. That's the whole point of kind of this whole, supposed decentralized autonomous organization stuff is, or whatever they want to call their group, is everyone participates. And
let's not go down the social credit score regime, please.
No, please not. We already have a country doing that, and we don't.
Yeah, and it's a nasty process.
Right. It's like, why would you adopt the worst possible scenario of screening people out? Wow.
Well, it controls people's behavior, and it's like, that's just not good.
It's ugly. That's ugly. All right. You want to move on to this
what they want, John? Oh, sorry.
No. He's got another story to talk about. Something that's actually pretty important in the space.
This final one, and again, I can't speak for the implementation, Okay, and I think there probably are issues with the implementation, but we've discussed this a lot. If we're truly to have DeFi, it's very difficult to do it without some fiat value floating around the system. Yeah,
Right.
So, and that raises whole kinds of world of issues, and the world of issues including having things like UST and algorithmic stable coins that can break, or having centralized entities that control it, which really kills the D in DeFi.
Sure.
We actually discussed this, I think, the last time or the time before, where I was going, look, there have been these OG dollar value synthetic positions that retain dollar value and have done so since 2016.
Yep.
And this new project, Collider, I guess you call it, I will call it all the time. Collider, there you go, have launched within a Lightning wallet effectively that, which is this 1x Bitcoin short, so that within your Lightning wallet, you can hold sats, a synthetic dollar value or a synthetic euro value. Now, this is a very under the radar type of project. Again, it's something that you kind of have to dig for. And yet, I'll be completely honest with you, it's the concept and this implementation are the first things that I've seen that have really excited me about the space for a decade.
That's awesome.
How fundamental I think, because everything that, you know, the people out in donkey shit land are trying to do, and horse shit land, and us purist maxis, okay, are going. The fundamental challenge is always going to be the control of the fiat value.
Right.
And this is a synthetic stable coin rather than an algorithmic stable coin. I think there's a very fundamental difference there. And that it's very much based on the use of these inverse swap perpetual contracts that we discussed. And I think people should look at that. It's still in beta. There's still some issues. There are probably still things that I personally don't like about it. I think it could be done better. But I think this is the future for crypto fiat value, whether it's from these guys or it comes from somewhere else. But this is the first time, and it's existing on Lightning, is to me a huge step forward.
Right. And real quickly for everybody, why don't you explain, because I know you've been an advocate for doing this for years, that you have seen as you trade on perpetuals that there is the ability to build a stable coin against this. Can you explain for everyone, like their fifth graders, how you see that working?
Yeah. So there's two types. Okay. There's two types of perpetual contracts. There's what we call a swap or a coin margined contract. And then there's a USD dollar. This is specific to a swap contract. What that means is that I put up 1 Bitcoin of collateral as an example. And if I take a 1x short on that, I mathematically can never be liquidated, because as the price rises, my margin rises in peg with the price, and as it falls, my margin increases in Bitcoin values. What that actually equates to is that a 1x short on one of these coin margins or swap contracts is always at dollar value of entry. So if I enter at $17,000 short with Bitcoin as collateral, if Bitcoin is 100 million or $1, it's always $17 of value.
Right.
And that's a synthetic position, and what, you know, people like me have been using for years and years in terms of retaining dollar value rather than swapping into a stable coin. That brings some massive advantages, this synthetic position. And when wrapped or expressed as a tradable thing, you get to where these guys are at. And again, I'm not saying that they're not without issues, but basically you can hold Bitcoin, dollars, synthetic euros, synthetic yen, I presume in the future, or whatever fiat currency they want, and transmit that on the Lightning network. So you can have, like the little thing shows there, you've got some sats, you've got some dollars, and you've got some euro. No central issuer, okay? No stable coin. It's not algorithmic. It is an extremely robust, in principle, and in practice on CEXs, again, has been unbroken through every up and down and crash. So I am really enthusiastic about this. This is something that is incredible for Bitcoin. It's incredible for Lightning, and it's incredible for DeFi in the space in general, which is this ability to have fiat representation of value that is 100% collateralized in a synthetic way, and 100%, if implemented correctly, trustless and permissionless.
Yeah, no, and I definitely understand your excitement about it, right? Because the critical factor from that perspective of having that stablecoin tied into the ecosystem is the ability, from my perspective, to build other things, right? Now you have an engine that feels pretty unbreakable for representing stable value. And now it's pretty endless, the number of things that can be built around that. And I think that opens the doors for Bitcoin and Lightning to have a much, much bigger role in the financial networks. And
yeah,
so
that's why I, you know, again, there's very little anymore that excites me in this game, other than watching Sam squirm on an interview. But this is something that, again, I've been spoofing on about, as you know, and doing nothing about. But where to see this, and again, I'm not suggesting that this is the perfect implementation. What I am saying is that if something like this, and again, just something else I didn't realize, like there are currently about 1,400 live projects being built on Lightning.
That's a lot. Wow.
Yeah. Again, they don't get the exposure because they're tokenless, by and large.
Right.
So, you know,
so there's there's nobody to shill and pump and dump it.
Yeah, and in many ways, this is exactly the same. This is, you know, looks like one thing, but what it can represent to DeFi and to the rest of the space, and again, permissionless access to fiat. If it's these guys or somebody takes this and improves it, and again, I'm not saying that this is bad. I'm just saying I haven't had a chance to dig into the details. I am aware that there may be one or two issues, but this is for me a kind of defining moment, and maybe it takes another 2 years or 3 years for this to get to where it needs to be. But this is big shit.
Yeah, that's awesome.
Sean, quick question. So what it seems like where it's going is that if you have these synthetics that are underpinned by, I guess, the original posting collateral, that you don't need USDT or USDC or DAI or any of these other ones in this Lightning platform. Is that right?
Yes, and I would also say potentially, you know, in wider things, because how this actually works is that it's $1 of Bitcoin long and $1 of Bitcoin short at the same time. So from a mathematical perspective, this is not like an algorithmic stable coin. It's a synthetic position on a perp contract.
So whichever way the coin moves doesn't matter, because it's almost like rebalancing
It always represents
automatically.
Now, there are issues, counterparty issues on exchange, and again, like, you know, I won't bore people with the details, but properly and the thing about this is we have on CEX's proof of this model going back to 2016 through pumps and dumps and COVID crashes and all of this stuff, and the model has worked, which we can't say about any other algorithmic or non-centralized. We don't have that depth of history to reach in. So again, I'm a Bitcoiner, as you guys know, but I do believe that the provision of fiat value is something that Bitcoiners are beginning to accept. And again, based on our premise of, you know, no government should be able to tell you if you can spend your dollars and so on, that it has to be some kind of algorithmic or synthetic position. And for me, this is just wonderful.
Look,
delighted.
I think there are still a lot of Bitcoin maxis that don't want it, or thought previously they didn't want it, because they always dream of, you know, that moment when Bitcoin flips over and is the money, right? And everyone forgets about stable fiat. And I think the argument to be made here is Yeah, maybe that's going to happen someday. And everyone hopes, I think, in that space that that's going to happen someday. But there's a huge, gigantic psychological, infrastructural, every aspect of human life has to flip on that. And you're not going to do that. And you're not going to get more people into thinking that way if you don't provide a gateway that includes fiat value. And so I think that's what's really critical for these people to understand is you may not want this to be the be all and end all, but this is the path forward to get there. So
yeah, and again, I think McCormack, who's always worth to listen to. This is a question of like we sit in our first world, and we have our first world issues. Yeah. But if you're trying to send money home, you're working in the first world and you're sending money home, using a volatile crypto is of no use to the receiver.
Yeah.
And so there is a case, and again, there's a strong case that if we are to be responsible about what Bitcoin and crypto, the real value it can add outside of idiots like me clicking long and short buttons all day, as in a permissionless, trustless money, this is a fundamental part of that.
Yeah, absolutely. And, it goes back to what we talked about one of the first times you came on the show, is that with all the activity in crypto, I think you were on for this. This was our discussion. The one thing we've kind of not done yet is money, or is payments, is buying shit. And this is a giant opening to that. And that to me is one of the critical, most important things about it. Now, I really appreciate you.
And again, I'm not shilling the project. I haven't looked at the TP. I'm just saying that the direction of travel for me is the most exciting thing I've seen in the space in a long time.
It's an entry point, and it's exciting to see because it opens the door to other people thinking about it and building around it, building on it, building competitively with it, whatever. And it's funny, last night, the guy that I met with, he runs an incubator in the Bitcoin space. And I said, can you show me your companies that are cohort in this current round? And he started going through the companies with me, and I was blown away. And I have a bias thinking in the back of my head of all the innovations happening over in DeFi land. And I got to tell you, shit's brewing in Bitcoin world. And
and as I said, I was surprised. 1,400 active Lightning
that's
projects
amazing.
around the world.
That's amazing. That's incredible.
Quietly, as we say in Bitcoin, stay humble and stack sats.
Love it. Friggin' love it. That's beautiful. Thanks for sharing that with us today, man. Now, what's on your mind with the market these days?
Do you want me to share a chart?
Of course.
Can
I do that?
Let me get my screen off.
Please.
Let me get my screen off. That sounds personal.
There we go.
Yeah, there you go, man. Sounds like a personal problem. All right.
Here's the thing about this.
Hey, Sean, you're wide split here instead of a window split.
Oh, whoops. Okay, I better stop that. How do I do that?
I think
screen.
There you go. Yeah.
Present. Okay.
And then choose window on the tabs at the top.
Window. Okay, cool. There we go. That should be it, Brad.
Yeah, we got you.
Yeah.
Okay, so let me take all my silly drawings out, and again, I've, I'm no more bearish because of FTX than I was, which maybe people kind of expected, but there's one truth here about what's happening in the market for over a year, which is we go down, we spend some time going sideways or up, we go down. We spend some time going sideways or up. We go down. We spend some time going sideways or up. Okay? There is virtually nothing about this that I can be bullish about. Nothing at all.
When you put it that way.
Because you just have to look at the structure. Down, sideways, down, sideways, down, sideways. If you look at it again as a technical person, from the point of view, we broke down. Can we go up and test 1920 again? You would kind of, not unreasonable expectation, but we're in thin air. And if you look at key support levels, we've lost this support level. The next is 13.8. So sure, we can go up here, but I'm no more bullish, and I'm certainly no more bearish than I have been for 6 months. It's playing out exactly as it should.
Do you think we have enough downward momentum to even break below 13.8?
I think we'll test 13.8. I think we'll again bounce sideways, and I think we get one last leg down into that kind of 11 to 9 area would be my call. So again, tying together a lot of factors. Like, here's what I would say to people who are not really active traders. Understand that what's happening is that every time we bounce, people are kind of going, this is the bottom, it's all wonderful. But the action's just consistent. Fall, sideways up, fall, sideways up, fall, sideways up.
Yeah. Hard to argue with that.
Hey, John, just for the listeners, obviously, we kind of know you've told us your strategy. You like to short a lot, but you're shorting with the core stack already in place. So you're protecting it. You're really hedging to protect that value. How would someone who's not like a perps trader or does crypto options, what's a simple short for them to do? If I'm not saying go negative, but I'm saying just as a protection. Like a little a little hedge there. What's the easiest way for someone to do that?
Well, I'm very much in the Talalio camp with Daly, whatever he's calling himself, which is cash is trash, except now. Holding cash is spot short.
Yeah.
If you think about it, So if you do not have the ability to short the market, I would first of all always come down to what's your time frame for trading. So if I'm trading 1 hour candles, I can see lots of activity if I'm long only, where maybe I can make some money. If I'm looking to build a stack for the next run, then this is very simple. Wait. Sit in cash. And I would even say, and I said it last time, again, if I'm looking to build a stash for the next run, I would simply say to you, wait until the market turns bullish. Don't try to, catching knives is an incredibly impressive feat. It's really, really impressive, but mostly people get hurt.
Until you catch it in the eye.
So if you're a short own or you're a spot only trader, recognize that being in cash is spot short. And I personally don't think there's any, and again, not financial advice, any probability that the market can flip bullish until end of Q1 next year.
All right.
Now, if you're you like me, crazy candle chaser, I trade at different, like I hold years long trades and I hold trades for a couple of seconds. That's a completely different game. If you're intraday trading, there are definitely opportunities where you can try and catch some of these bounces. But if you're looking to build a stash, and again, what do I say to people? It's very simple. Look, top to bottom. Is what you're interested in 1,600%. What are you worried about 10, 20% moves down here for?
Makes sense.
So again, investor.
And do you want to sleep?
Do you? No, I am not anti-trading in any way. I trade a lot. It's what I do for a living. But I wouldn't be DCA. I know everybody always says DCA, but look, the action is so simple: down, sideways up, trap; down, sideways up, trap; down, sideways up, trap. How much money do you want to lose in this? Again, as a longer term trader, how about wait for the bottom? It'll be very obvious. Here's the funny thing: it's not going to be unobvious. The bottom, the bottom is going to be you're going to see the Fed do something, and you may miss a 20% bounce off the bottom, but that's 20% of 10K, let's say.
Right.
So my God, you're entering at 12 instead of 10, and my call for the next market is 200 plus. Like, what are you stressed about here?
Yeah, exactly.
Now, if you want to be crazy scalper kid, that's a different game. I could talk for days about that and bore people. But my strategy is quite different. My base currency is Bitcoin. I don't hold any fiat. I don't hold any fake fiat. So I'm using these inverse swap contracts to collateralize short plays and blah blah blah. But again, that's not available to American traders and so on. So I think recognize that cash is spot short.
Yep, that makes total sense. I love that. Hey, how would you feel about next week talking about what you do though on those short little tiny time frames?
I would love to. I mean, I can show you some of my algos. How they work, how they perform, and my insane button clicking.
That would be awesome, because I think
what I would also say to people, I haven't lost on a trade since 2008. Okay.
Holy shit.
And I lost a lot of fucking trades in 2008, just to be clear. Okay. And so but I achieved that by having a simple principle in my mind, which is not losing in this game is winning. Yeah. And trying, and so I can go through how I trade and so on, and how you can actually, with some really simple ways of looking at the market in a different way, generate these situations that you can trade without loss. Yeah. Nice. And if you can trade without loss, then, if you're a really bad trader and you're losing 9 out of 10 trades, but those 9 equals 0, the one win is the one win. Yeah.
Yeah. That's beautiful.
And by the way, I'm not unique in this. In the MI group, there's traders in there who are on, 1,500 to 2,000 straight trading wins.
That's awesome.
So there are ways to play this game, okay, where you're not getting optimum upside. Yeah.
Yeah.
But optimum upside isn't the point in this game. The point in this game is protect your stack. Yeah. And if you don't degrade your stack, this is the chart that matters. Yeah.
Right.
Yeah. So that, again, no, I'd love to do that next Thursday.
That's awesome. That's awesome. I think that'd be very, very educational for everybody. That's fantastic. Nice.
Yeah. I like that advice, Sean, for everyone, because that is so true. If you're just sitting in US dollars right now, you could go get 6%, in risk free right now and keep waiting. And so even if you miss that 20%, you got the 6 points, plus you got whatever's going on with DXY or dollar appreciation as a little kicker. And so you're not really losing the 20%. You're maybe missing 8%.
My point
cool.
would be more fundamental. 20% down here is meaningless.
Right.
Again, we all, trust me, I've been a bear since May I turned flip bearish up here, and it's annoying me to still be a bear. Yeah. And so I know what it is. I want to start, buying some shit coins and hitting those 100Xs. Yeah.
Sure.
But patience, not knife catching, again, for longer term traders, longer term investors is key. Do not worry about catching the bottom. The effect on your P&L in 2 years is so marginal. And if you're trying to catch the bottom, you're probably going to start getting hurt.
Yeah, that's when you lose.
Yeah.
That's awesome. Fantastic, man. How's the weather in Ireland?
It's absolute shite. I'm loving it, man. Like we're basically all Vikings. Yeah, gray and miserable is like, that's... we love that. We love that shit. It's like, everybody goes, it's the sun show. When the sun's shining here, I'm miserable.
You just need a good fire burning inside.
To go to the pub. There you go.
Smoke up the house, man.
Trust me, we never need an excuse to go to the pub.
That's fantastic. That's fantastic. Well, I'll send you the invite for next Thursday, buddy. I really appreciate you coming on. This was fantastic stuff today.
Very good, guys. And again, if I could just one last thing, I'm sorry to my Google buddies, and I'm talking my closest friends in crypto who are not talking to me. Okay, I'm doing it because I believe it has to be said.
Yeah, look, and I think you've got to speak that truth, man. I mean, I that's the kind of behavior we don't want. Like, you can't filter for.
But isn't it like censorship? I mean, exclusion. It's all those things that you don't want in open, decentralized stuff.
Yeah,
and this is why Maxis always seem toxic on Twitter, by the way, because like when I wrote this to a few people basically they just went, "Oh, you toxic fucker," and I'm going, "No, actually, when you can actually say it and that kind of explain your thinking behind." Anyway, I'll shut up about it.
I'm not a Bitcoin maxi, and that makes complete sense to me. So anyway, I appreciate you speaking out.
But you're more a decentralization privacy advocate too, so
True.
it seems to fit more on the DeFi side as something that we're always dealing with. Where Bitcoiners, maybe they're not thinking about it as much.
Yeah. Well, I tell you what, we're going to start launching merch because I'm going to launch a line of donkey shit and horse shit shirts next week. So I'll have to get
For the
Sean's
kids?
home address so I can send him one.
T-shirts for Christmas, man.
That's it.
I could see you could do like a onesie for all the kids. It could be like a Richard Hart kind of onesie,
I am DeFi Lunch donkey shit. There you go.
Your onesie covered in donkey. Yeah, that's going to sell a lot. Right.
Yeah. Sean, thanks so much, buddy. I hope you have a great weekend, and we'll see you next Thursday.
All right, guys. Thanks very much.
Take care.
It easy. Cheers.
Bye-bye.
Thanks, Sean. See you later. Bye.
Good.
I love that guy, man.
Always. Love that guy.
Yeah, he's awesome.
He's just good human.
Well, and he's right. What I like about listening to him is, I believe in, history and, what happens in the past. And, he's got that perspective that goes back to 2008 in Bitcoin, or 2010. I can't remember exactly. Whereas mine only goes back to 2017.
Yeah.
So it adds more breadth to what, more perspective, experiential perspective than I have.
Yeah.
And I love how he uses all the tools of the market in ways, the speculative tools, in ways that are actually really de-riskers, not, risk on type stuff. And he's steady, and I know he says he's a Bitcoin toxic maxi guy, but I don't see him as toxic at all. Do you?
No, well, look, I mean, he uses some of the lingo, scam, shitcoins, shilling.
But that doesn't hurt my feelings.
He's not like the hardcore toxic dudes that just have the real difference in Sean and them is they operate in the mold of a cult member. Sean operates as somebody always willing to look at alternatives he's not married to Bitcoin, the brand. He's married to decentralization, trustlessness, and permissionless as an operating principle, as a concept. And if he said it before to me, if shit comes along that does it better, he's all over it. Right. And so for him, it's about the principles. It's not about the brand of Bitcoin. For so many of these toxic maximalists, it's about holding on to the emotional tie to this brand Bitcoin.
The MLM-y stuff. Yeah.
Exactly,
I get it.
Exactly. And so I think that's why he doesn't seem like a toxic maximalist does, because he's really not. He's only a maximalist about the principles that he thinks are important. So that's good.
Well, you can tell when he brings up, Collider, and we know that, BTC DeFi, let's say, is not something that a lot of the BTC people want to associate with, talk about, whatever. But when he showed Collider, and I saw that, essentially a synthetic stable that, when you, in this whole world of stable, CBDCs and stable coins, and just a tremendous amount of scrutiny that's all over these right now. I mean, there's just a lot going on. This maybe puts that whole DeFi around the edge of BTC looking even more practical to me in a way that doesn't contaminate the core of BTC, with shitcoin stuff. And that to me is pretty interesting, because now imagine you take all the USDT and USDC. I mean, not going to, but let's say you took it all out of the market and all the FUD that comes around that. And now it's all just pure synthetics that are tied to specific collateralized assets. That takes a lot of the regulatory stuff, the steam out of the punch, basically, because the targets go away. And you've got one big asset, BTC, functioning as like Fort Knox gold reserve that's anchoring DeFi in a way where there's a wall that seals it off.
Yeah.
Where, you can't contagion through that wall into BTC. I mean, that's kind of what I saw. And of course, I'm just spinning ahead 10 years.
I will tell you, he sent me this Collider link yesterday, and I've already heard him out on in terms of why he thought it was important previously when he's talked about it. And I got to tell you, I've always advocated for DeFi on Bitcoin. I am enthusiastically excited between the shit that Sean talked about today and the stuff I learned about this week. I am enthusiastically excited about the potential of what could be happening on Bitcoin. And I think that there is going to be a groundswell of shit getting launched. And folks in the rest of DeFi, it's not going to evaporate or go away. I'm not saying Ethereum is going to die or anything like that. People should start paying attention, because the ethos of the maxis and the ethos of Bitcoin and the nature of it and the tested nature of it is going to make it more attractive to big money and regular guys and girls than what we're doing over here. And so I am enthusiastically looking deeper right now into the projects and things that are happening in Bitcoin, because I think Sean's absolutely right. This is big news. And after meeting the people I met this week and seeing what's going on, I'm very, very excited.
Well, because they perceive that this could be, BTC DeFi could be the institutional DeFi.
Yeah.
That we talk about. It's easier to regulate. It's in the US, for the US audience.
Yeah. Yeah.
And they all know BTC. At least they know the letters.
Yeah.
And when you say BTC, it's like if any institutional person has anything to do with crypto at all, on the edge of it at all, that's what they know.
Yeah.
They think they know.
That's the first thing everybody knows.
Yeah. So this is pretty cool. I remember when I first started looking at Phantom, and you could issue, FUSD. They had a synthetic there that you could spin up. And I thought, oh, that's kind of cool, but I never really messed around too much because it didn't really make sense at that point to me. But now Collider does make sense because of the underlying asset. And so I'm excited about that. I look forward to exploring that more.
Sean's very excited because he's been advocating for it for years. I want to tell you people something. If you're listening to this show, do not miss next Thursday's episode. I can tell you that the shit that Sean is going to talk about next week is when he talked about what did he call them? Baby traders, baby Sean's. I don't remember what he called them. He has trained people in our community to do the kinds of things he does, not to the level he does it. Like he's got dedicated developers developing his algo ideas, right? But he has trained people in what he does, and those people are now making real money doing what he has trained them to do. And so I want to encourage everyone that's listening to this, that's ever decided or tried trading and failed, or just frustrated with it or couldn't figure it out, whatever. If nothing else, listen into this perspective he's going to bring to the table next Thursday, because look, the man has not lost since 2008. And there's a reason. And he knows what he's doing, and he knows how to play this game, and he knows how to protect himself doing it. And he is a highly successful person. So I encourage everyone, tune in next Thursday, because even if we don't get to a level of detail in the short time we have with him, you're going to learn a lot about how the market works, how he does it, and how he makes money trading. So anyway.
Yeah. When I first got into I know we got to go, but when I first jumped into your material indicators chat back in, I don't know, I think it was 2020. And I'd always see him in a discussion. There was a lot of people in the discussions. Yeah, there you go. There's another one right there.
Justin's from In My World. When XBT speaks, I always listen. Agreed.
Yeah, he's another one that I started seeing early on. And then there was another guy like Dumbo, I think his name was, and a few others that seemed to really kind of have good. I'm not leaving anybody out, of course. Apologies. But just a lot of smart people. And Sean, Justin, and a few others were always in that discussion about different things, and always collegially discussing things, not screaming and throwing stuff, which is what I like about your chat too. It's not toxic at all, but it was just great debates. And, I learned a lot just being in that channel for a couple of months, staying on top of the 5,000 messages a day. I've been excited to stay forever.
The beauty of it is look, we've got people like Fred, who's brilliant.
And Fred too.
His market analysis is brilliant. He designs amazing trading tools that institutional and retail people use. But the analysis that these guys put forth and the training that they put into those communities is amazing. And like I said, when it comes down to having a track record of extreme success, there's not anyone that you should be listening to first besides Sean in terms of actual trading, the way he trades, market making, etc. So anyway, let's wrap it up. Holy shit, we went way long. I didn't even realize it's 1:21.
No, it wasn't as long as when you just start rambling about shit and we go for 2 hours and we're functionally long.
Here we fucking go.
It's Friday, baby. Let's go, bitches.
There we go. We'll see if Joe gets back in on the show Monday. I don't know.
Everybody knows it's the shtick back and forth that they like.
I'm coming live from the cruise ship next week, Joe.
Oh, that's right. Oh, cool. Awesome.
Yeah.
Straight from the Lido deck. Pina colada in hand.
I may have to kill video because you have to remember that everything internet on that ship, unless we're in port, is satellite. So my video may slow me down, so I may just go audio next week. But we'll see.
Yeah, either way, we'll work it either way. But it'll be fun, man. I like the mobile elements. Yeah. But make sure you position yourself in the pool deck area with all the.
You want all the hotties in the background?
Yeah, I thought that might have been bad to say, so I was holding back.
No, they could be male hotties or female hotties. It's okay.
Right. Yeah, I mean,
your shallow representation of beauty is, probably a little offensive.
No, but I'm not into that. I'm not into kind of the jacuzzi chicks in bikinis with fake augmentation is not my style.
Dude,
I'm more into the regular people. I'm a man of the people, buddy.
I got to tell you. No, you know what? Let's not go there. We've had enough. This show's gone long enough. Thank you, everybody. Appreciate you. Love you for watching and participating. Justin, Eamon, Shizzy, Niblets. Oh, thank you so much, Sean. You are an awesome human being. We appreciate what you give back to the world and to DeFi Lunch. Thanks so much. You don't have anything to give back to us because we haven't given you anything, but we love and appreciate that you're willing to share so much with us. He'll be back next Thursday. Do not miss that episode, but frankly, you shouldn't miss any episode of DeFi Lunch every Monday through Friday at 12 noon Eastern. If you're listening on Apple Podcasts or Spotify, please be sure to subscribe, rate, and review us. It really helps us boost our audience. And if you're watching on YouTube, subscribe, click the little bell to get notifications, and smash the thumbs up button, as the professional YouTubers say, so that we also get a boost there in the algorithm. We love and appreciate all of you. Thanks for listening and watching. Joe, have a lovely, lovely weekend.
You too, buddy. And thanks, everyone. You have a great weekend, and we'll see you on Monday. And enjoy the cruise, buddy. Look forward to it.
I will. I'll talk to you Monday. Have a great one.
Cheers, man. Talk to you.
Bye-bye.
Bye-bye.